Heidi, thanks very much for joining us today. As we look at the capital market structure at the moment, money is diversified. We're getting it from different sources. You're getting private equity, you've got institutional capital. How do you match the brand selection with all that different operational strategy?
Yeah, I think it's very, very critical to see the investor's lens. So what is the strategy and horizon? If you think of the more institutional private wealth people, it's a bit similar because take the extreme, the institutional capital, long-term horizon, they want to have very stable income, very much of a security type of investment. The private wealth and family office capital is much more looking after their own best trophy. They want to be seen, they want to make a good investment, they want, in a way, security probably through a brand, and want to be making sure that they have certainly also a long-term security, but probably a bit more upside than a traditional institutional investor. And then you come to the private equities. They want returns. They want to have, within 3 to 7 years, they want to turn again. So they need to make like a big shift and change within that investment horizon that they have. Hence, they are much more, the project and the process, everything has to be much more agile. It has to be tailored to them, and also a brand and operator must understand the horizon from the very beginning to make sure you can really change something in this period of time given, because otherwise you will struggle and you will not achieve the goals that you both have set together as an investor and operator.
Do you think the brands and the operators are fairly flexible when it comes to those I think you outlined 3 different types of buyers there. I mean, they've got very different horizons. Are they better at kind of adapting their offering to meet those needs, do you think?
They have to. And there have been many changes in the environment as well. So we have the management agreements. You can see, and you hear that in many discussions, that many owners are also, challenging the brands to say, hey, you're just a brand, you're more of a just franchise, more than anything else. But really the management capacities that you had, we don't see them anymore. So there's a lot happening on that front. And then if you think of in the more, continental landscape, we are here in Berlin, Germany, you have traditional lease structures where nowadays the owners, while they were keen to have fixed leases most of the time, they in turn have to adapt to the current to the current happenings and make sure that they might shy away from this pure fixed lease structures, because the operators and brands are not willing to give this anymore, because they need to have asset light structures, and they have to have a reaction to the current market environment and what's happening. So I think there needs to be an adaptation from both sides. It's the owners that need to understand a little bit more the brand and operator from a sense of risk. And on the other hand, the operators and brands also need to be probably a bit more back to we are really managing, or if they adjust the brand, also adapt the structure and the franchise agreement in the right way.
Yeah, I think we're in for a period of big change coming up in the next few years, especially in the German market. Things have to change, don't they?
Yeah.
I mean, it's not just that, it's the consumer demands change as well. So on one hand, you've got the investors, you've got the operators, you've got the brands, then you've got to think of the consumer as well. And definitely since COVID, guest demands have changed. I mean, hotels have got to adapt. Are we talking about hotels? Do you see a lot of hotels that really haven't changed and need a very active asset management strategy?
Yeah, definitely. So I think we have nowadays, everything is, if you think of, it's twofold. You have those who are looking after a really defined experience. It needs to be a very special moment they can spend at a hotel, and they need to have all the services that you can imagine. And on the other hand, we're shifting towards a very light, economy-driven concept that need to, adapt to the other side of the business. So we have quite a big shift towards both.
You don't be stuck in the middle then, do you?
No, there is nothing left for the middle. The middle class or the middle segment is the one that is facing the biggest challenges these days. And you have to decide. And it's also not always the solution to just upgrade, because look, sometimes it's not affordable. It's expensive to do it. It also, the market doesn't allow you, because ADR levels probably in this location are not where they should be. And then it's maybe more wise to downgrade even, but to have a clear offering to your people that would book at your hotel. And if you think of a big brand like Motel One, they were rooms only. Now they have taken over assets where they need to also deal with some MICE facilities. So you have to be more flexible and you have to decide where you stand. But to be honest, also a repositioning cannot always be the answer. You need to be very smart about this and have the costs under control and decide upfront if the market and this asset allows you to do such repositioning.
I guess that's where you come in. I mean, could you talk a bit about your role and how you work with both sides to try and work out the best way forward, whether it's going down or going up or staying in the middle?
For sure. So look, I see ourselves often as the mediator between the two sides. Nevertheless, we work on the owner side, but I think also the owner needs to, in some cases, understand a little bit where a brand or where the market is going. And on the other hand, we need to make the brands aware of what, in particular, coming back to your first question, what is the investment horizon of this particular investor? So if we have an investor that is after long term, maybe we can, in this respect, give a bit of more thinking of how you structure now a lease that is no longer a traditional lease. And on the other hand, you would want to make sure that if it is a PE investor, that you give them the greatest flexibility that you can get. Because while there are some instruments that you can use, I think from a PE's perspective, the biggest value that you can have these days is flexibility. And they appreciate brands can add value, but in the first place, they often see the flexibility piece as a very critical point in this whole discussion.
And just in terms of kind of consumer preferences, we talked a bit about it before, but I guess there's a danger that if you try and model what you're offering to a consumer preference, it changes very quickly. Are there any brands or strategies you think offer the best type of future-proofing when it comes to hotels?
In my view, all the brands that are successful come with a very clear proposition. You cannot be a little bit of that and a little bit of this. You should have a very clear value proposition to your clients, be it your owners, because you also have a partnership with them, but also your guests. And the minute you are somewhere in between, I think this is when you lose. But if you give a clear value proposition, be it an economy product, nice, you can do that, or be a hostel, for example, as well. You have a clear profile. But if it is then this before mentioned asset somewhere in the middle, and you do a little bit of MICE and a little bit of leisure and a little bit of like just the rooms product, you will lose. And I think this is what brands need to be clear about. They need to be distinctive. They need to be clear in what they offer to both sides, and then I think they can be successful. And obviously, the big brands still benefit a lot from their reputation. Bigger, let's take again the private wealth people or also institutions. They pay a lot for a brand to have because they see this is a value with all the loyalty that comes on top. But on the other hand, if you are more in the PE space, they are much more critical around what does the brand really add here. And this is where it becomes very interesting.
And talking about that, how do you communicate value when you're talking to the owners? I mean, how do you demonstrate it, both from a JLL point of view and from a broader industry point of view? What is value?
Value is, again, coming from who is the investor. I mean, in the first place, everyone wants to optimize cash flows. That's clear. So the NOI needs to increase. But then there are various aspects which drive the value of an asset. This can well be the flexibility point. So can I flip my management agreement to a franchise agreement? Do I have that flexibility at a later point in time?
It's all about de-risking, isn't it, I guess?
It's all about de-risking, making sure that you have the biggest flexibility in your hands with the contract given. On the other hand, with what we said earlier about the contract structure for lease, this needs to make sure you have some probably variable components with it. And obviously there are tools such as then, if you think of contractual structures, owner's priorities, key money, all of this. But to be honest, to the point of key money, it is a tool and it can help you to, increase your value in the very beginning. But ultimately, if you have lower fees, this is what the majority of investors these days is more after than mostly just the key money.
And that's the $1 million question I want to finish with. I mean, what levers actually move the value of an asset? What can you do to actually change the value, increase the value?
Clarity, flexibility, and also the fact that you really make sure what you are in as a value proposition to your guests and to your owners. I think this is then what makes it successful. And also think of it as a partnership from the very start. And I think this makes a difference.
It's a great final message. Heidi, thanks very much for your time today.
Thank you.